like we have 15 years left to bring down emissions 90% as compared to 1990 levels. So right now, we should be phasing out, anything that causes emissions, right? We should be investing heavily, like whatever funding there is for energy systems, it should all be going into zero emission fuels, zero emission grids, and zero emission electricity.
Hey everyone, and welcome to the next episode of Common Ground. As always, I'm your host, Deb Ryan, and joined by my co-host, Teresa Hartman. How are you, Teresa?
Hi, everybody. Good to see you, Deb.
As always, make sure you like and subscribe to stay on top of everything we're doing. Today, we're going to dive in and talk about the EU again. We spoke about them over the summer, but there's been a lot going on that the EU's been both doing and not doing. I guess. Between voting against and declining the Omnibus. They've actually put their climate targets in place. They've delayed the deforestation rules. There's a whole, and some other things as well. So we're going to dive into all of it. Teresa, you're actually in Europe. You're a lot closer to this than I am. Like, it seems like there's a lot, and some of it's very counterintuitive. I don't know. It's confusing to me.
It's confusing to all of us. So all of these things are sort of happening at the same time, right? So like Parliament's back in session. They started back up in the fall. And there were all these outstanding climate questions that they'd sort of put on pause before the summer, and then they all went on vacation because they're European, so they take a long summer break. But yeah, as you said, so climate targets are agreed. The use of carbon credits is agreed. They could not agree the reporting requirements. We should talk about that because I think a lot of that was driven by sort of Trump and the trade deal and like ongoing asks from the Trump administration to do away with the reporting requirements. And then there's also news on the deforestation regulation. So we sort of had like forestry, we had corporate reporting, we had the use of credits, and we had the EU climate targets going into COP. And all of this is coming together because I think two things are happening at the same time, right? One is that it's the International Climate Conference. The high-level summit is already happening this week. The conference is starting next week. So there's a lot of pressure to agree these climate, at least the targets, to take into the summit. And then on the other hand, there's this like ongoing process on competitiveness in the EU, where the EU is actually trying to deregulate, right? So it's trying to reduce the administrative burden, especially on SMEs, and it's trying to keep funds flowing into innovation and digital and financial services and trying to build out all these different tracks. So I think the two goals are colliding at the moment. We spoke
Yeah.
about this before the summer, I think, right?
And it makes sense because, going through what's been delayed and what's been agreed and what's been voted no and all sorts of stuff, some of it does seem like it's in tension a little bit. So it's it definitely is worth kind of talking about.
Smelling weird. Is that what it's Yes.
Where do you want to dive in first of all the things that's going on? I don't know. I feel like it's either the omnibus stuff around the corporate reporting or maybe the credits. I don't know. Where do you want to start?
Well, start at the top. We're going into COP.
Yes.
The
Okay.
EU Council agreed the climate targets, right? So the climate targets that we already had for the entirety of the EU, the European Union, was to reduce emissions by at least 55% by 2030 compared to 1990 levels. That was agreed. What wasn't in writing was the NDC, so the nationally determined contribution for 2035. So they've just agreed that, which is this weird range still.
It is
Um,
very strange. Yeah.
right? So we talked about this in one of the last episodes where we talked about the EU had to sort of agree on the interim target for 2035. And they came to New York Climate Week announcing a range instead of a target. And at the time, we still expected them to narrow down the range, right? So the range is this 66 to 72% of reductions. So it's quite there's a lot of variance in there, right? Like you might be at 66, you might be at 72. But the one thing that we do know is that it's going to be minus 90% by 2040. So that is actually quite ambitious.
Yeah. That is very ambitious. And it's, again, there was sort of a lot of talk following the UN General Assembly in New York in September about the fact that the EU seemed a little bit confused about, there was a lot of trying to get all the different member states, on the same page around that, which might explain why at least for the 2035 target, that they've kept this range as part of that. Do you think that's like part of it, or
Yeah, definitely. I mean, there's just too much disagreement happening inside the EU, inside the Council and the Parliament at the moment, right? So, like, really what we're seeing is sort of like, on the one hand, the more right-leaning parties are pushing towards competitiveness and deregulation, and the more left-leaning parties are pushing towards like more stringent climate targets, more investment in social reform, and so on and so forth. But there just isn't an agreement on a single line, right? And like between that, like competitiveness and clean development sort of dichotomy, they just left it as a range. So now it's 66 to 72.
there's some interesting activities in there. Like there's a whole bunch of stuff that they've agreed, in terms of like how are they going to get to this 2035 kind of number, and then also the full 40% reduction. Sorry, 90% reduction by 2040. So like I don't know. For me, pardon.
So many numbers.
I know all the different numbers and getting them right. For me, there's some interesting stuff in here. And again, I always go straight to the fossil fuel things, right? But like some of it in terms of like the agreement around sort of the transition away from fossil fuels and like phasing out of fossil fuel subsidies and stuff. The thing that I find really interesting with some of that though is it's actually been done like they talk about the fossil fuel subsidies as long as if they don't address things like energy poverty and some of that kind of stuff. So like it's actually sort of this I guess not agreement, but just sort of this like reckoning a little bit with the EU that it's like, okay, how do we reduce our emissions, but how do we also make sure we're not driving up electricity prices unnecessarily and some of that kind of stuff. And then also kind of, the accelerating towards the phase down of unabated coal, I think is interesting. It's not just getting rid of coal completely, but getting rid of coal that doesn't have some sort of like CCUS or emission point capture or something like that with it as well. So I think that's been an interesting kind of piece for me in terms of like how the EU, I feel like they've not necessarily like done away with some of these things, but I feel like they've softened it a little bit to try and really kind of acknowledge that like, yes, prices in the EU kind of went out of control a little bit and they need to make sure that they balance that. Is that how you kind of read some of that as well? Like,
Yeah, I don't know that the pricing, I mean, like, so we've obviously had a pricing crisis, at least for fuels, as a result of the Ukraine war, right? So like that was really very, very noticeable. And then plus the Middle East crisis, right? So like it was very noticeable that once we had those disruptions between like Russia and Ukraine, that really impacted pricing in the EU. But that's been going on for years. I mean, the same for the Middle East crisis, right? Like, I mean, all of these geopolitical conflicts were driving up energy prices, and we're still quite energy dependent, right? So, like, while we are generating a lot of our own renewable energy, and there's a certain share of nuclear and coal in the mix, of course, we still do very much depend on imports. So that's been interesting to see. Um, I'd say to your point, right? Like to me, the points on fossil fuel subsidies and unabated coal power are actually quite schizophrenic. Um, I don't know how you would get to a 90% emission reduction for the entirety of the European Union by 2040, right? So like we have 15 years left to bring down emissions 90% as compared to 1990 levels. So right now we should be phasing out, I mean, anything that causes emissions, right? We should be investing heavily, like whatever funding there is for energy systems, it should all be going into zero emission fuels, zero emission grids, and zero emission electricity. However, we're saying that, we're going to phase out some of the fossil fuel subsidies, but not all of the fossil fuel subsidies. So while we're tripling renewable energy capacity, we're also still subsidizing, to be honest, we're still subsidizing fossil fuels, right? And like that to me is very schizophrenic. And like, I don't know how you could like steer the energy system towards a common goal for 2040 while also incentivizing the fossil fuel
yeah.
system.
The unabated coal piece, I think, is an interesting piece, and it might allow us to pivot to the next topic as well. But like the idea of just having a coal power plant running and stuff like that is essentially saying, okay, we're not going to allow that. But this is where the idea of like keeping a coal power plant so that we can generate power and for people across the EU or in different, there's some countries in the EU that are much more heavily dependent on coal power than others. But by saying it needs to be abated, the use of then removals credits and stuff like that, because you'll never get, to your point, you'll never get fossil energy production, whether it's from gas, whether it's from coal, down to zero without then using offsets or carbon credits to offset those emissions. So, like, I think that acknowledgement of like, okay, well, we won't shut some of these coal plants in, assuming that they can do something like carbon capture, or they're going to, you know, do something with removals credits and stuff like that. Like, I don't know. I feel like it strikes a bit of a balance in there, to a certain extent, because I don't know. We'll see. I mean, we'll see. But
Like, yeah, right. So, like, right now, what the EU has decided is to allow 5% of international credits. So, like, 5% of Article 6 credits into the EU ETS, right? So, like, within the compliance scheme, there will also be international units being traded in there. So, that does, in a way, inflate your allowances, right? Like, it raises your cap in a way because you get more external reductions in. That said, it's 5%, right? So it's
it's
not
not a lot.
going to be more like, if we continue to produce coal power at the rate that we're doing it now, those 5% are not going to allow us to offset all the emissions, right? So there's just, it's not going to be enough, right? There's a potential revision to 10%. Um, but yeah, ultimately, like one doesn't quite equal the other. So as long as we still have that 90% emission reduction target, I think we're gonna have to move away from coal.
Hmm. No,
Or
that
the
makes
other way around, we need to not have a 90% emission reduction target.
yeah. Any final things on the going into COP with the targets and stuff before we switch and talk about um
I mean, I
the
think
carbon credit?
overall, right, like super positive signaling for the market, right, is a super positive. Like we are, we're still looking at removal credits from that are sourced domestically, so the sourced from Europe. We have a target and agreement amongst the council members going into COP. So I think overall, super positive for the market, right? Like we have clarity, we know which credits, how many credits, where the credits are going to come from, and we know where the target is. So like, I think overall, like this is well done.
Yeah. The final piece actually before we do switch off there, and I think that's interesting is that the target represents, based on what the EU is looking at from a budget perspective, the target represents currently like 34-ish% of the EU's total budget. Whereas it does exceed, they have a target to only have 30%. So they're around their budget in terms of how much they want to spend on climate, but they are a little bit over what they've sort of committed to and stuff. I don't know if you've got any thoughts around that in terms of where that kind of sits in terms of, because there's always a lot of tension around, we've spoken a lot on this podcast about climate financing and where the money comes from and how do we fund these things and stuff like that. So curious if you've got any kind of takeaways on the budget, or if you've heard anything through your networks and stuff that are kind of happy about it, or it's fine, or I don't know. I'm curious.
I think that this might be the first time in my entire career that I've read that somebody has over allocated climate funding. So generally the way that the headline goes is like, we need like 3 trillion of funding for nature. We don't have it. In this case, the headline goes, we wanted to spend 30% of our budget on climate action. And actually, like once they had finished writing the budget, they were like, we're actually spending 34%. So like over, they've overachieved. I think this is the first time in the history of climate finance that anybody has overachieved on climate finance.
Yeah. No, it's a good kind of take on that. So it'll be interesting to see how, obviously budgets are always, it's interesting to then it'll be interesting to see how they track against that and if that continues to be the case and stuff like that. Um so switching, sort of diving into then the international credits, you outlined what it was. I mean, this has been an interesting journey for the EU because the EU ETS has obviously been in place for a long time, and they initially allowed international um, credits. They then stopped that for a long time because there was a lot of questions around quality, and we've talked about permanence as well on this and stuff. So now that there's going to be this sort of trial period of allowing 5% credits back into the market, I think it'll be interesting. Like, what are your kind of high level takeaways of like what this could do and like could signal in terms of like the overall carbon markets and where it might go?
Actually, still think that it's quite unexpected. So the
What's
EU
that?
ETS, like as you've pointed out, like in recent years, has been incredibly closed off to outside influences, right? Like it doesn't allow nature-based solutions. It hasn't allowed international credits. It hasn't linked with any of the other schemes, right? So like you see things like Quebec linking to California and so on and so forth, and like the EU hasn't done that, right? And I think it's had a very very strong stance of preserving the integrity of the ETS, the way that it was written by EU states without allowing any other credits to enter, right? So like to me, this was a huge surprise of them opening up. Like it's not a surprise in the political context, right? As in like we've had lots of governments lobbying for this, but it's a surprise in the history of the ETS, as in like it's been really closed. So generally speaking, like I mean, it's a positive signal to markets, right? Like you would expect lots of developers to get very excited about this because it opens up a new market. I think overall, like on the whole, in terms of like the impact on climate, on sort of emission reductions, it remains to be seen, right? As in, like, I think that there is a real danger that this will dilute the cap, and there's a real danger that we import emission reductions and removals that aren't real. So I think TBD on the success of it. It's a 5-year pilot phase, so let's see how that goes.
Think it'll be interesting. I mean, the EU obviously doesn't have the highest emissions in terms of the total size of the market compared to other emissions trading schemes, but it's one of the most liquid markets. So I think the piece that I'm interested in seeing is like, again, given they've been very particular about, yeah, like high quality, Article 6 only kind of international credits, removals only and some of that kind of stuff. Like it'll be interesting, I think, to see how that drives liquidity broadly across like some of these markets and price like realization and stuff like that. Cause the other piece on this is like, EU allowances tend to trade at, 80 euros, 90 euros, 100 euros, whatever it is. Whereas the carbon markets, um, you know, even on the removal side, I guess they're kind of floating around that kind of price as well. But like, it'll be interesting just to see how the price of those specific credits, like, does that start to align with the EU allowance price, or do we sort of see some separation? And yeah, I think it's going to be interesting to see some of those market dynamics and what that then does outside of the EU in terms of demand and some of that kind of stuff. Because obviously, anyone in the world can buy those same kind of credits. And so I don't know, like I think that's the piece I'll be interested to see if like does it help drive some additional liquidity into projects yeah, like more broadly. Like
Oh,
it should be helpful. So
yeah. No, absolutely, right? And like, I mean, as you say, like the European ETS has been very liquid, prices have been very high. Um, and just like significant, like the price of an allowance is just so much significantly higher than the price of credit in the voluntary carbon market, right? So, like, if you think that this will allow nature-based removals in where, you know, traditionally you see something like, I mean, if you're doing well, you're seeing like $40 a ton, right? But like we're way off the sort of like biochar prices at 100 euros a ton, somewhere around that. So fascinating to see what it'll do to pricing within the EU ETS, but also fascinating to see what this will do for nature-based solutions developers.
yeah. Um and the other piece, I mean, you sort of mentioned it as well. So this the agreement, I guess, or the adoption of this pilot was part of a broader initiative that the EU did around competitiveness. Um, like, just talk a little bit about like, the need, and there's been a lot of talk about like how does the EU simplify some of these projects and processes as well, and like how does the EU also remain competitive as well. So like, what are you kind of hearing in that sort of space? Because like I said, this piece of this like allowing of the credits was buried in a broader kind of thing, and we can link some stuff for folks in terms of the press release, I guess, that the EU put out around this as well. We can put that in the show notes for folks.
Yeah, I mean, it was really broad. I don't even know what to say about it anymore. It was basically this 40-page document that talked about, so it's the communique on competitiveness. where the council, so the heads of state of the EU member states, they basically reiterated the need for simplification. I can't speak today. They reiterated the need for simplification, right, and the alignment of frameworks. And overall, like, I am so with you because the EU has had sustainability regulations that just did not make sense when taken when taken like when you look at the totality, right? Like you had the you would have the claims directive, and then you would have the consumer directive, and then you would have the reporting directive. And when you looked at all three, they ended up contradicting each other on like what you had to report and at what point you had to report and what claims were allowed. And they contradicted each other on the definitions of what net zero, like it was disastrous. So like overall, let me just say like, yes, I agree. These frameworks need to align. I mean, that's the most basic thing, right? Um, I think what's odd. I mean, multiple things are odd, but maybe to start from the top, the heads of state made a big push to finalize the reporting. So everything that's in the Omnibus directive, right? So the CSRD, the CSSDD, they made a big push to finalize those by the end of the year. But when this came out, like when the communique came out, the parliament was already vetoing the proposal, right? So it's like a very strange way for the heads of state to communicate with the parliament who represent the European people, to say we want this done, and the parliament is like, but we don't like the text, right? So it's this very public fight and disagreement on what's meant to happen there. So reporting is still a big question mark. We still don't know which version is going to go through, if any of them are going to go through. So that was the first one that was a little bit weird. And then, I mean, like, really, if you look at this competitiveness story overall, right, like, they're not just talking about sustainability frameworks, they're actually talking about military spending, they're talking about digital, they're talking about financial services, automotive, energy, environment, you name it, right? Like, it's pretty much they're just talking about any
Every
industry that we have in the
yeah.
EU. So really quite confusing to embed something as specific as sustainability reporting into a broader competitiveness dialogue.
Well, and it's interesting because I think, I mean, the energy, and we've talked about it a lot, but the energy conversation here in the US has been quite front and center because everyone's like, where are we going to get all this power for AI and data centers and stuff like that? And specifically on that digital piece for the EU, it's like, okay, well, the EU's had an energy kind of crisis or energy issues for a while. If they're going to add stuff like data centers and stuff into the mix as well, like, it's like, okay, so it's an interesting, and again, we've talked about it before as well, where like this whole idea of like climate policy is kind of energy policy and some of that kind of stuff. But it was interesting to see all the other things as well that were sort of just lumped into this of like, how do we make sure the EU stays competitive across all of these things. So it's going to be interesting to see how that sort of evolves as well. To your point, and what that looks like. Because yeah,
Yeah, and we're not, right? Like in a way, running a competitive dialogue is acknowledging that we're not competitive, right? And like when we talk about digital, I mean, you need to imagine like we're not talking about creating another meta or creating data centers. We're like in the EU, we're still talking about things like you should keep an electronic record of your bills so that you can be audited. Like we're talking about like very 1995 kind of digitization of records, right? Like we're nowhere near anything you would see on the West Coast.
yeah. No, it's an interesting differentiation as well, right? Like in terms of like how does the EU stay sort of like competitive in these spaces as well? So let's kind of flip to the omnibus discussion then, because it for me this was really interesting. You've sort of indicated where that this whole idea and this idea of like simplification of reporting rules again, like great, and then yet this omnibus was put forward to essentially say, okay, how do we simplify the language in all these different reporting directives? And it was voted no. So like explain kind of for folks like what it entails, like, and yeah, let's just start there because there's a lot in it.
Make it make sense?
Yeah, like
Let's try and make it make sense. So there were existing sustainability reporting regulations, and they had already started kicking in, right? So they were kicking in tier by tier for the large organizations first and then trickling down. in the
And this is
spring.
stuff like for folks, it's like, yeah, the CSRD, the corporate disclosures, there's all these different acronyms, the CS triple D, all this kind of stuff. It was all the corporate kind of disclosure kind of things, right? That people
Corporate
have to do.
disclosure. So it's basically things like, what are your emissions? What is your footprint? What's the footprint of your products? How many credits are you using? Where are you getting those credits from? What's in your supply chain kind of thing, right? So it's really looking at your own emissions, somebody else's emissions that you're using, and then embedded emissions and credit use. So basically, it's that question of like, what's your footprint? What are you doing about it? Um, so good idea overall. We should all be reporting about that. And like the reporting piece is important because it allows us to allocate capital in a climate friendly way, right? Like if you don't know how much a company has emitted or what they're doing about their footprint, you also cannot make climate conscious decisions, either as a consumer or as an investor.
And I've talked about this, the importance of data, both, like all kinds of data, and climate data is one of those things, allows like companies, consumers, like shareholders to make decisions based on standardized information. And I think I do think, that standardization of, like, okay, I know that this company is the same size as this company or it's in the same sector and I can compare them now. Like, I think that is so important in terms of like, how do we value emissions and stuff like that? So I agree. I'm like, I think it's a great idea that we do it. But like the EU system, to your point, was very complicated and there was so many different directives and all this kind of stuff. Like, so
Definitely. And like it's comparability for investors or consumers, like across the sector. But I think like the data even allows the company itself to make better decisions, right? So like understanding exactly where you are and like in a standardized way, to your point, like where are you emitting what and what would it cost you to abate that? I think that there's very few companies that actually have like a complete view on that, right? So like the more you gather that data and like organize it into scope 1, 2, and 3, the more it enables you to like have a climate strategy around those, right? As in like which ones are we going to reduce and which ones are we going to offset and which ones like where are we eventually going to get to removals, right? And like unless you understand what your impact is, you just can't manage it.
yeah, exactly. Where does companies have finite amounts of capital and they can then figure out where they allocate that capital to have the biggest impact, right? Like, which is great.
Exactly. So that's the point behind all of those reporting initiatives. In general, reporting is a great idea, as Deb and I have both said. The way that those reporting initiatives, like the requirements, were quite complicated, right? We did a whole episode about that and like why it just wasn't working for smaller companies. So there was a moment in the spring of 2025 where there was a stop the clock directive, and it basically stopped the implementation of it. So like those companies who are already reporting continue to report, and those companies who had not yet started, they weren't meant to start reporting so that they could simplify the requirements first. So the simplified requirements, this is important to remember, is that you only have to report if you have more than 1,000 employees and 450 million euros in revenue under CSRD. And under CS triple D, it would be if you have more than 5,000 employees and more than 1.5 billion euros in revenue, right? So like effectively the simplified proposal, like all it said was you need to be quite large and have quite a bit of revenue for it to make sense to go through the administrative exercise of gathering all this data, compiling it and publishing it. So it reduced something like, I can't remember the exact number, but I think it reduced the burden on something like 80% of the companies that were meant to report that now no longer have to report, but it would trickle down to them because they would get information requests, right? So if they're in a supply chain, they might still get an information request, but they don't have to do their own publications. So in general, I think the simplification made a whole lot of sense. It was meant to get waved through. Um, it didn't get waved through, right? And like there was so many like things that happened at the same time around this process. So like the US trade deal happened in July, I want to say. Yeah, it was in July.
I'll make it up. Yeah.
Um, yeah. And part of the big push from the US was to simplify these requirements. Or to take them out altogether, right? So there's still a push from the US and Qatar to do away with some of
Yeah.
these
Because
regulations.
it should be noted, like a lot of these corporate reporting directives are just for companies that report to certain exchanges, whereas the EU, and correct me if I'm wrong, you talked about the size of the company. It didn't matter where that company was based. But if their EU operations were over 1,000 employees and a certain amount of revenue. It didn't matter if it was an American listed company, they would still have to report if their EU operations were a certain size. So that's where that's because it would I think it would seem confusing to people of like, why could Qatar and the US actually like try and influence this? And it was because it's not
It
just for
applies
EU
to US
companies.
companies.
It applies to any company operating in the EU. So I think it's a differentiation that we've seen with some of the other corporate reporting that's just been for companies listed on a certain country's exchange more broadly. So anyway,
Yeah, no, totally. Right. So like this applies across the board, which is a little bit like our carbon pricing as well. That applies like, if you're going to sell your goods in the EU, you're going to have to pay the tax on it. Um, but yeah, so like ultimately, like a few things happened, right? So like one was the trade deal that basically pushed for the simplification. The other thing that happened, and we had a whole lot of more conservative, more right wing, more business friendly governments get elected that maybe weren't as supportive of all of these reporting requirements. So you had this like top down push to stop the clock, table the simplified proposal, and then push it through. But the EU has three levels of governance, right? So, like, you have a parliament that's elected directly by the people. You have the commission, who aren't elected at all. They are basically civil servants. And then you have the council, and those are all the heads of state that get together, right? So the council is, what's that, like the Senate, basically. Then you have parliament, and then you have the commission, and the commission creates the proposals. But the legislative body is actually the parliament. So because the clock was stopped by the heads of state, the parliament basically said that this is a procedural issue, right? And like this matters on a couple of levels because you have different factions who are all opposing this proposal, but for different reasons. So, like, you have one faction that's opposing it because of the procedure that wasn't right. You have one faction that's opposing this because they don't want it simplified, because they do want everybody to report. And then you have a faction who actually doesn't want any reporting at all. So they're stalling the process. So basically, what's happening is that the people who want more reporting and the people who don't want any reporting are suddenly on the same side of this process where they're just stopping the process, right? So like
yeah,
basically
well,
what's going to happen is that this is gonna go back into the legislative process. There will be a plenary session about it. And then it has to like climb back through all levels of governance
yeah.
again.
And I think one of the comments I know you had made about this is like it's pure politics at this point between all of those different groups and the different sides of the argument and stuff like that. And so it'll be it's going to be interesting, right? To see how it's now a political issue and not just a policy process issue with with some of this. So it'll be interesting to see if and how it moves forward. So,
Yeah. And I mean, like, in terms of policymaking, this is a disaster, right? I mean, like, we've said this before, but like, the one thing you want, no matter what the policy is predictability, right? You want to know what you need to do, how much you need to pay, and when you need to do that. And I think this constant back and forth on this particular piece of legislation, like if anything, like it's hurting everybody in the process, right? Like it's hurting the credibility of the EU, it's hurting our external relationships with the US and other trade partners, and it's definitely hurting businesses inside the EU who were prepared for this, but also businesses who were not prepared for this, right? Who are just trying to understand what they're meant to be doing.
yeah. Because that's, I was going to ask, like, in terms of, like, particularly for the businesses that have to report, like, it's got to be so confusing of, like, okay, we think we were part of this thing. We were trying to get ready for it. Okay, it was on hold and there was a stop the initiative. So, like, do we or don't? And now it's, like, in this weird limbo. And, like, because, like you said, like, some of the reporting started this year. So, like, it's for companies, it's got to
Right,
be
there's companies that are
extremely,
reporting, right? Like, if you
yeah,
have more than those 1,000
yeah, then
employees,
you're
you
fine.
can
It's all the
ignore
ones
this
in
entire
between.
process because you're reporting already.
Yeah. It's for everyone in between, right? And particularly those next level down companies who don't have as many, like they've still got a large employee base and stuff, but they're just not as big, right? Like, and so it does provide a lot of instability for companies that they're like, okay, it's on, it's off. Okay, what do we need to do? Like, it's got to be, yeah, it's challenging.
It provides a lot of instability for the companies that don't have the resource to follow
Exactly.
this process.
Yeah.
So it makes no sense whatsoever, right? Like this applies to companies that like do not have a climate policy lead in house because who the hell has that? Very, very large corporates have that.
Yeah. And they're not affected because they have to do it irrespective. So it's like it will be interesting to see what kind of like how this evolves and like the sort of how that tension kind of does or does not get resolved, given that it will impact sort of mid-sized companies in particular. So yeah. Anyway, we'll keep an eye on it and we'll let people know what's going on. So there's one final thing that we wanted to talk about that's been kind of a little bit more under the radar, but I know you've been looking at it a lot. And it's this deforestation, I'm pulling up the right name of it. The deforestation regulation has been postponed. So, like, just explain to folks like what was sort of on the table, what was being asked for. Like, let's start there, and then we can dive into like what actually happened.
Yeah. I mean, so I think that this regulation actually fits very much into the reporting and due diligence processes, right? So, like, this was a really big deal for land use companies with international supply chains. So, basically, if you're in food and beverage, or if you're in timber and pulp and paper, this really matters because it basically was an EU regulation that said that you had to exert due diligence over your supply chain for forest risk commodities, right? So, classically, those are commodities like soy or timber or coffee that lead to a lot of deforestation in the source countries, right? So, like coffee, soy, and timber really drive deforestation. There are others, right? Like you could add palm oil into the mix, beef.
Yeah,
All of
agriculture
these
broadly. Yeah,
commodities ultimately drive deforestation. So, like, this was basically a piece of regulation that said, like, hey, if you're a food and beverage company and you're importing all this beef from Brazil or soy from Brazil and beef from Argentina and palm oil from Indonesia, you should look at whether or not this import, this good, has caused deforestation.
yeah. So, and then it was put on hold and, like, for no again, sort of for no reason to a certain extent. So, like, nobody was asking for this. Like,
Yeah.
even some of the big food and beverage companies were like, "Yeah, okay, like, fine." Like why do you think it was put on hold?
Why do we think it was put on hold? The official line is that the IT system was not ready.
Okay.
Nobody believes it. So basically what happened, yeah, I know, this is just the most absurd line you've ever heard in your life. So this piece of regulation has been in negotiation for years. Everybody's inputted. There was a really thorough public consultation, and you had really large land use companies, food and beverage companies especially, but also others who were in favor of this due diligence directive. There were also like business alliances that were lobbying in Brussels to repeal the whole directive. But it does feel much more political. So, like, I don't think that the EU is actually concerned about business pressure in this instance. I think that this is politically a very uncomfortable directive because it intervenes into the sovereign territory of those forest countries, right? Like basically EU companies are going to start asking very uncomfortable questions of their Indonesian suppliers or their Nigerian suppliers or their Ghanaian suppliers, right? And that causes a lot of tension on the international stage, right? So plus, I mean, like everything we just said above, right? As in like the trade deals, Trump wants less reporting, and we have a whole lot of like heads of government now in the EU who also want less reporting, who are not that in favor of more sustainability policies. So you had all of these like political factors at play. Um, and the EU Commission comes out and says we're actually going to postpone the implementation of this framework. Um, and again, like I don't think that I've ever seen this happen in my entire career, but businesses actually went to Brussels and said, no, do it. Regulate us. You've already done all the work. We've already done all the work. We are ready. So you had like food giants. You had Ferrero, Mars, Nestle. Food giants went to the EU Commission in Brussels and said, no, please go and implement this policy. And the only reason that the EU named officially in their communications for not implementing the policy that was already agreed was an IT issue, and that the IT could not be ready to hold and track the data that people were going to submit.
Yeah, it's crazy, and, like, I don't know, like, the food stuff and, like, thinking about something like coffee, like, we're there's already and they're voluntary systems for the most part and stuff like that, but, like, the idea and we talk about fair trade coffee and some of these kinda things, like, some of that kind of yes, it would mean that companies would have to go and ask uncomfortable questions, but I feel like some of those questions in some of these very sensitive supply chains are sort of already being asked and things like that anyway, so that companies can put stamps on, and again, sticking with something like coffee, that, is produced in very specific parts of the world and is consumed everywhere is like, I feel like some of that work was already happening, right? Like it wasn't, and not necessarily for climate reasons. The deforestation obviously is a huge climate reason that we wouldn't do it. But I feel like there was already a lot of awareness around that, particularly from a consumer. Because when we're talking about food and beverage, it's you and me, right? Going and buying these kind of products and being like, okay, well, I do want fair trade coffee, or I do want, like things that I know, are not causing some of these environmental impacts. So it's I feel like that's where maybe the companies are much more aligned with it because it's easy for them to be like, "Look, we're doing the right thing, and we're trying to make sure we do the right thing anyway." And so the regulation doesn't necessarily like prohibit us continuing to try and do the right thing because that's what our consumers are demanding. So I don't know, like yeah, it's a weird one to me that it's like, and it'll be interesting. Like the idea of fair trade coffee is not going to go away. Right. Like, and that's obviously not just an EU thing, but yeah, I don't know. It's a weird one to me that it was like,
Yeah. No, you're right. And like we do have these labels, right? But like, I mean, I don't know what your supermarket looks like, but in my supermarket, like the labels still make up a fairly small share of the products I have in
it's
the
not it's
selection.
still as I said, it's still a voluntary thing.
Yeah, it's still a
Um,
voluntary thing. It's fairly small, right? Like you can get fair trade coffee, but then that's not necessarily deforestation certified, or you can get FSC timber, right, in your furniture, but then that's not necessarily fair certified, right? And like so, there's all these competing labels that look at different aspects of the supply chain and like how people or environment were treated along the line that's just not really taking hold, right? And like I've personally, like I've always really believed in like regulating these things, right? Isn't like let's regulate the floor of like here's the minimum that you should be doing, and then if you end up having companies or suppliers that excel and that do more, I think that's great. Um, but yeah, I think that regulatory piece to me is really really important, and like if we just want to think about like the moment in time that we're heading into the forest COP. Right? So, like, Belém is in the Amazon, and, like, it was always like, it was billed as the forest COP, right? And, like, the EU kind of, like everything that I said at the top, right? Like, the EU walks in with, like, clear targets and agreements, but then also turns around at home and repeals the forestry directive. I think that there's just, like, something very sad about that.
yeah, no, it is, and it's to your point about the fact that it's not like something like fair trade coffee or whatever it is, right? Like, isn't widely adopted. It's sort of like, the idea of like organic produce and things like that, right? Like, because these things are voluntary, and yes, the certifications that companies can go through and stuff like that, like consumers often don't believe them. And so like by having then regulation in place, it levels the playing field. It allows a lot more transparency around some of this stuff. So it's like yeah, like, it sort of works against it, and I think, yeah, your takeaway there on, like, the EU going into this and being like, "Oh, well, we don't really care about the forest," like, is a bit
How sad is that? Like,
yeah, and, like
their, like, IT system wasn't ready. Sorry, guys.
well, the EU's always been very proud of the fact that they have been the climate leader, rightly or wrongly, but that's been the EU's sort of stance for the better part of the last 2 decades, and, like, they're sort of starting to, like, lose that mantle a little bit, so
I
I
mean, I
don't
hope
know.
not. That would be shocking, right?
I don't
Like,
know,
in the
I feel like they're
US and
giving
the
it up
US.
quite easily, right? Like, they're saying like, "Oh, well, we don't we're not gonna do the forest thing." We didn't know that they were gonna have a target even in time for COP, so it's good that they did kinda get that done, but, like, I don't know, it feels like they're not leading the pack, I guess, as much as they used to. Maybe
No, I
that's a
mean, I
better
think that there's just too many domestic issues at the moment, right? Like just politically, like security issues, inequality issues, geopolitical issues with our neighbors, right? Like there's just too many things happening at the same time, and it's not just taken away attention, it has taken away clarity of commitment.
That makes sense. So, anyway, there was lots to unpack there. So I'm glad we actually went through it all. We'll be definitely keeping an eye on how some of these things evolve, both through conversations at COP as that's going on, and then yeah, in the EU more broadly. So Teresa, it's been a pleasure as always.
Good to see you.
Yeah,
See you next time.
for sure. Make sure you like and subscribe.
Like and subscribe.